Money habits can either lift you up or hold you back. But when it comes to everyday spending, which card is truly better, credit or debit? By the end, you'll know how to make the smartest choice. Most people use their cards daily without understanding the powerful difference between credit and debit. One can build wealth, the other might limit it. Let's start simple. A debit card uses your money from your bank account. A credit card lets you borrow money up to a limit and pay it back later. Debit cards are like cash. You can only spend what you already have. That sounds safe, but it also means you're not building any financial history. Credit cards, on the other hand, are powerful tools. Used wisely, they can unlock opportunities like better loans, rewards, and even protection. But they also come with danger. If you overspend and don't pay in full, you could fall into a cycle of debt that damages your finances long term. Many people fear credit cards because they've seen others go broke with them. But it's not the card. It's how you use it that determines the outcome. Using a credit card for daily purchases can actually make sense if you're disciplined and pay off your balance every single month. Let's talk about protection. Credit cards often come with fraud protection, insurance on purchases, and extended warranties. Debit cards? Not always. Imagine your card is stolen. With a debit card, the thief has access to your actual bank account. With a credit card, it's the bank's money at risk. Recovering lost funds from a debit card can take days or even weeks. But with a credit card, fraudulent charges are usually reversed immediately. Credit cards also help you build a credit history. That history affects whether you get approved for loans, apartments, or even some jobs. Your credit score is built through responsible credit card use. If you always use debit, you miss out on this crucial part of wealth building. But debit cards aren't useless. They're great for people who are just starting out and need to avoid the temptation of overspending on credit. Debit also helps with budgeting. You see your balance drop immediately, which can discourage unnecessary spending and promote discipline. Another point, debit cards have no interest. With credit cards, if you don't pay in full, interest charges can add up fast and trap you in debt. Still, those who master credit cards can benefit from cashback, travel rewards, and perks that debit cards simply don't offer. Let's say you spend $1,000 a month. If your credit card gives 2% cash back, that's $240 a year. Free money. Rewards aren't just gimmicks. If you travel often or shop frequently, using the right credit card could save you hundreds or even thousands yearly. But that only works if you pay in full each month. Once you carry a balance, the interest cancels out the benefits and costs you more. Let's compare the emotional aspect. Using debit feels like money is leaving your pocket immediately. That sensation can deter overspending. Credit feels like free money at first. That can lead to emotional overspending, especially when you're stressed or trying to impress others. People often spend more with credit because they don't feel the money leaving. That psychological distance is dangerous if not monitored. Now let's talk about credit limits. If you're approved for a credit card with a high limit, it doesn't mean you should spend that much. Using less than 30% of your credit limit is ideal. It shows lenders that you're responsible, which boosts your credit score. If your limit is $3,000, try not to exceed $900 in monthly spending to maintain that healthy ratio. Another credit card myth: you must carry a balance to build credit. False. You build credit by using the card and paying it off in full. Carrying a balance actually hurts you. You pay interest, and your utilization ratio stays high. Avoid that at all costs if possible. Debit cards don't help your credit score, but they do help you stay grounded if you're recovering from past financial mistakes. For teens or students just learning about money, debit cards can offer a safe way to understand budgeting and daily expenses. But if you want to start building credit young, getting a secured credit card is a good alternative. It uses a deposit as collateral. That way you can train yourself to use credit wisely. And when your credit improves, you can graduate to an unsecured card. Let's talk fees. Debit cards may have ATM or overdraft fees, while credit cards may charge annual fees, late fees, and foreign transaction fees. The key is to choose cards that fit your lifestyle. If you travel a lot, look for a credit card with no foreign fees and strong travel rewards. If you don't travel and hate fees, a no annual fee cashback credit card might suit you better than a flashy airline card. Debit cards generally have fewer perks but are widely accepted, and won't charge you interest or tempt you into debt. Credit cards often have welcome bonuses. Spend a certain amount in a few months, and you earn 200 or more in points or cash. That initial bonus can be powerful, but again, only if you spend what you would have spent anyway. Never spend just to hit a bonus. Now, let's touch on overdrafts. With debit, if you spend more than you have, the bank may charge a fee or decline the transaction. With credit, you can exceed your balance if you have over-limit protection, but it may trigger penalties or hurt your credit score. Some banks link checking and savings accounts to avoid overdrafts, but it's better to track your balance and avoid fees altogether. Both cards require responsibility, but credit cards demand a higher level of self-discipline and financial awareness. If you travel abroad, using a debit card at foreign ATMs can trigger fees, while many credit cards waive them entirely. Credit cards are also safer to use for hotel reservations or rental cars. Some companies won't even accept debit for these bookings. Let's say you rent a car with a credit card. You might get built-in insurance, saving you from buying the rental company's overpriced coverage. Debit cards offer simplicity and direct control. You won't go into debt, and your money is yours, unless you overspend or encounter fraud. But if someone steals your debit info, your actual cash is at stake. With credit, the risk shifts to the card issuer, not your bank balance. In financial emergencies, a credit card can serve as a short-term backup. Debit cards offer no borrowing power in times of crisis. However, relying on credit for emergencies is risky. It's better to build an emergency fund and use credit as a secondary option. Let's imagine you need to fix your car urgently. If you have no cash, using a credit card makes sense, but only if you pay it off quickly. Now think about subscriptions. Many services prefer credit cards because they're less likely to be declined or canceled. And if you dispute a charge, credit cards usually offer more protection and easier resolution than debit cards. Some credit cards offer travel assistance, concierge services, and event access, features completely missing from debit cards. If your credit card is declined, it doesn't mean you're broke, it just means you've hit your limit. With debit, it likely means your account is empty. Let's compare the impact on budgeting. Debit forces you to think within your current means. Credit allows you to project into the future. This projection can help if managed well, but it can also fuel illusions of wealth that eventually lead to debt. Some people blend the two. They use credit for fixed bills and debit for variable spending. That's one way to stay in control. Another approach is to use credit for all spending but pay off the balance weekly instead of monthly to avoid surprises. Daily or weekly check-ins on your card balance can prevent overspending and boost your financial awareness. Still, if you're impulsive, debit might save you from yourself. Credit can feel limitless, which makes it dangerous without a clear plan. Think of credit cards like a sharp knife, useful in the right hands, but dangerous if you're careless or distracted. Debit cards are like butter knives, safer, but with fewer capabilities. You're unlikely to hurt yourself, but you won't cut through major financial goals. To choose the right card, first know your habits. Do you track spending? Do you budget? Do you save before you spend? If you're just starting your financial journey, stick with debit until you've proven you can manage money consistently. Then graduate to credit with a low-limit card. Set up auto pay to avoid late fees and never spend more than you can afford. Building credit early helps you later. When you want a car loan or mortgage, your responsible use of credit will pay off. The higher your credit score, the lower your interest rates. That means saving thousands over the life of a loan. Credit can open doors that debit cannot, but it's a tool, not a magic wand. Misused, it can shut doors just as fast. If you've had trouble with debt, consider a debit-only season. Reset your habits. Then slowly reintroduce credit with structure. Some banks offer alerts for both cards. Use them. They help track spending and catch fraud early, giving you peace of mind. Budgeting apps can sync with your cards to categorize expenses, flag trends, and suggest savings opportunities. Whether you use credit or debit, the goal is the same. Spend wisely, avoid fees, and protect your financial future. One overlooked strategy is to pair both cards intentionally. Use credit for rewards and debit for daily spending or cash withdrawals. Avoid cash advances on credit cards. They come with high fees and immediate interest charges, unlike regular purchases. Avoid overdrafts on debit cards too. Turn off overdraft protection if it tempts you to spend money you don't have. Check your statement every week. Whether you use credit or debit, reviewing transactions helps prevent fraud and keeps you financially aware. Set clear spending categories for your credit card: groceries, gas, subscriptions. Avoid using it for emotional or impulsive purchases. Use debit for discretionary spending like restaurants or entertainment. This keeps your budget grounded and curbs unnecessary spending. If your goal is to buy a home, use credit wisely to build your score. Mortgage lenders look for responsible credit usage and payment history. If you want peace of mind, stick with debit. But if you want growth, security, and benefits, learn to master credit instead of fearing it. For young adults, a good starter strategy is to use a credit card for one recurring bill and set up autopay. That builds history without risk. Some people set a monthly credit card budget and treat it like cash. Once they hit that amount, they stop spending until next month. To protect your cards, use two-factor authentication, avoid sketchy ATMs, and never save card details on public computers. If your bank offers virtual cards, use them for online purchases. This adds an extra layer of security, especially with credit cards. If you're in debt, tackle your highest interest credit cards first. That strategy is called the avalanche method and saves you the most money. If you need early wins to stay motivated, start with the smallest debt. That's the snowball method. It's psychological, but it works. Credit card interest is brutal. If you carry balances, your purchases can cost double or more over time. Always try to pay in full. Debit won't charge you interest, but it also won't reward you or build your credit future. The opportunity cost is real. For financially savvy users, credit cards are better. For beginners or those recovering, debit cards are the safer stepping stone. But don't see credit as a trap. See it as a challenge, a test of discipline, a path to proving you can manage money well. The secret isn't in the card, it's in the person holding it. Master yourself, and you'll master any financial tool you use. Ask yourself, do I spend emotionally or logically? Do I track expenses daily, weekly, or not at all? Honest answers lead to wise choices. If you're not ready for credit, that's okay. Strengthen your habits first. And if you are ready, choose the right card, learn the rules, and commit to paying in full. Your future self will thank you. In the end, the smartest choice isn't credit or debit. It's understanding how each one fits your goals, lifestyle, and current reality. Be honest about your weaknesses. If credit feels tempting, set limits, use alerts, and check balances daily. Structure equals freedom. Be ambitious about your strengths. If you're already budgeting and saving, adding credit can accelerate your financial journey. Debit is training wheels. Credit is the full ride. Don't skip steps. But don't stay stuck on step one if you're ready for more. It's not about status. It's about strategy. Choose tools that serve you, not ones that impress others or follow trends. Use credit like a scalpel, not a sledgehammer. Precision creates financial freedom. Mindless use creates regret. Track your monthly expenses and compare them to your income. If the gap is shrinking, reassess your card habits immediately. If your card habits are boosting your savings, credit score, and peace of mind, you're on the right track. Keep going. Celebrate small wins. A paid-off balance, a lower interest rate, a higher credit score. Momentum matters more than speed. Remind yourself, the goal isn't just more money, it's less stress, more freedom, and a life you control, not one controlled by debt. Credit and debit are just tools. Wealth comes from the habits you build, the plans you make, and the discipline you develop over time. You now understand the full picture. Credit versus debit, pros and cons, risks and rewards. The next move is yours. Make it count. Subscribe so you can learn how to change your mindset and your money to build wealth.